You know, you tell me, you think this rock, is this rock gonna last 15 years? No, this rock's been here for millions of years, but the IRS, for whatever reason, says, hey, that's a 15-year asset. Pretty awesome. I'll take it as a write-off. I don't really care. Don't judge my beautiful property. The best investments are not always the most beautiful ones, okay? What's going on, guys? My name is Hayden Crabtree. I'm the co-founder of Remote Cost Seg, where we make cost segregation studies easy. We're here today at one of my personal investment properties. It is the perfect opportunity to talk about one of the biggest categories that the IRS allows you to take in cost segregation, which is the 15-year asset class, also known as land improvements. So as you'll see here, I have a very beautiful 10 acres of RV storage over 2 lots. And pretty much, to be honest with you, all this property is land improvements. Number one, the first thing I want you to know is the IRS defines a few different asset classes. The biggest ones are 5 and 15-year asset classes, and that is accelerated depreciation. If you own a property, if it's residential, it's 27.5 year. If it's commercial, it's 39 year. Come over here with me as we have a customer rolling by. But effectively, this property is gonna be broken down into only 15 year. I really don't have much 5-year asset classes. Now, if I did not do a cost segregation study, all of the value that I paid for this land would live in the 39-year bucket, okay? 39 years, that means I would get 1/39 of it for the next 39 years. But by doing a cost segregation study, I'm going to bring some of that value into the 15-year asset class, which is land improvement asset class, okay? And I wanna show you some of these examples here. Number one, whenever I bought this land, I didn't really care about these bushes. I didn't buy it because of these bushes, but these bushes, per the IRS, are actually a land improvement. The IRS says these bushes will last 15 years, even though who knows how long these bushes will be here. They might be here 100 years. It doesn't matter. They're classified, all landscaping is classified as a 15-year asset. The other thing, what do we see? We have all of this grass out here. This grass is a 15-year asset, okay? So this grass, while it may not seem like much, is a depreciable asset that I could take as a tax advantage. The other thing I want to show you as you stay right there, and we'll work our way inside of the property here. We of course have a mailbox as a 15-year asset, but we also have stormwater items. You can see my culvert here that as it rains and water drains out, rain is gonna go through this culvert. That is a depreciable asset. The IRS says that will last 15 years, even though it's of course made of concrete. It's probably already been here 15 years. It'll be here for another at least 15 years, but that is a land improvement. This is the definition of a land improvement. If we could think about what a land improvement is, it's anything that we took a raw piece of dirt and made an improvement to it, to the actual land itself, not the building, but the land. That is a land improvement. The next asset here that I want to point out, if you want to come over here and we can start to talk and walk through this property. The next thing that I'm standing on here is asphalt, okay? This isn't concrete, this is asphalt. This asphalt drive here had to be installed. This is a 15-year asset that the government will allow me to write off. The next thing that I want to show you is the fences. Believe it or not, the government says the fence, and this is a gate, both the fence and the gate are 15-year assets that I can accelerate. Now, we talked a little bit about the actual time length of it, and it's a little bit confusing because the government says, oh, well, it's a 15-year asset. And so, again, I told you if I didn't do any accelerated depreciation on this property, it'd be 39 years for everything. So does that mean that a 15-year asset I'm gonna take over 15 years? Well, the short answer is it depends, because the asset class that it falls into then allows you to take different types of depreciation and accelerate it. The biggest one right now is bonus depreciation. As of writing this, or as of recording this video, bonus depreciation is at 60% for this year. They're trying to pass that bill to get bonus depreciation back up to 100%. And let's just act like bonus depreciation were at 100%. What would that mean? Well, that means out of all the 15-year land improvements, I'm going to be able to write off 100% of the value of those, okay? So let's say, for example, I do a cost segregation study on this property, and it turns out that I have $200,000 of land improvements in this property, okay? That's totally hypothetical situation, just making up a number. What would happen in that category if bonus depreciation were at 100% is I would take a $200,000 write-off. Now, this property right here This property will bring in a little less than $200,000 of taxable income. So I will protect all the money that I make from this and pay no taxes on that. And then in addition, I will also have some leftover money that is not used on this property. Well, guess what? That can then protect my income that I'm making on other places, whether it be other properties, whether it be other projects. As a real estate professional, I could take it against W-2 income if I had it, right? So there's some differences there in what you can take and what you can't. I'm not a CPA, and by the way, none of this is tax advice. This is one investor to another seeking to educate you, okay? And let's discuss the difference between what a land improvement is and what a land improvement isn't. You probably saw here a second ago that we have these big covered RV structures in the background. And as we look at these, if we'd ask ourselves the question, is this a land improvement? Okay, so this is where being knowledgeable in the cost segregation study industry is so valuable, because the cost segregation study audit guide was written with buildings and investors like casino owners, car dealerships, huge corporations, hospitals, that kind of thing in mind. They don't clearly define whether or not this structure here, is it a building or is it a land improvement? What is the argument that you would make for those? I'm not gonna tell you what argument I would make for these, but I wanna point out here, there are a couple of things we have to consider. Number one, this is a foundation. Okay, and foundations that homes sit on, that any type of building sit on, foundations are actually not considered land improvements unless the entire structure itself is considered a land improvement. But generally speaking, a concrete foundation, this is technically, you know, this is a pier here. It's not a complete foundation, a big footer. But this right here is not. So you think to yourself, oh, well, a driveway or landscaping or you know, a concrete pad that a building sits on, that's got to be a land improvement, right? Because that is something that that was not there from a raw piece of dirt. But the answer is no. That is a structural and integral part of the building itself and not a acceleratable asset. It's a depreciable asset. I can depreciate this concrete pad on a 39-year schedule, but I cannot move this into the 15-year asset class as an individual piece. So we look at the building as a whole and determine how are we going to treat the structure, and then that is how we would treat the individual components of the building itself. And again, like I said, a lot of these things, they aren't clearly defined. And so it's up to me to form an opinion of whether I want to take this whole thing as a land improvement and what can I find to support my opinion? Can I find other people who have been audited where the IRS has ruled on it? Can I find any other people who are doing it and have come up with great opinions on it? Or do I have to, from scratch, start my own opinion on it? Okay, so that's a little bit about it. Now I want you guys to come over here and I want to show you something really interesting, okay? And again, like I told you, don't judge my beautiful property. The best investments are not always the most beautiful ones, okay? So I want you to notice something. See where I'm standing right now? See where I'm standing? And then guess what? I just got a little shorter, right? And what I want you to come out here and what I want you to notice as we look left and as we look right, come out here and show them on the camera. As we look left and as we look right, you can see that this is not natural. You can see there is a clear, for all my golfers out there, this is called a tier. You can see a clear tier here in the land. And what does that tell me as a construction professional? What does that tell me as a cost segregation professional? That tells me that grading has been done. When they came out here and they first started doing this, they had bulldozers, they had excavators, and they were out here doing work on this property to level this out and to get this tier, this change in elevation built specifically. That may also tell me, if I could go back and prove it, that this is fill dirt. They paid somebody in a dump truck to bring outside dirt in. Guess what? If that's the case, that is a land improvement. So the dirt on top of the original dirt could be a land improvement, but it would depend on the particular, it would depend on the particulars of how the property was built and the details of it. Now, the next thing that I want to show you here as it relates to land improvements, all sorts of driveways and drive aisles are land improvements. So as you look through here, you can tell that gravel was brought in to build this road. There's not gravel over there. There's some gravel over there. There's even gravel underneath this guy who's parking right here. Maybe it's just a lack of grass growing because of his RV being parked there. But all of this gravel, believe it or not, right? I mean, you tell me, do you think this rock is this rock gonna last 15 years? No, this rock's been here for millions of years, but the IRS, for whatever reason, says, hey, that's a 15-year asset. Pretty awesome. I'll take it as a write-off. I don't really care, right? So all of the land that's been done here, that is a acceleratable asset, all of the gravel that's on top of the land to build the drive aisles. And then one of the last things that I want to show you as we can work our way over here to where I can have you see it. One of the things that I want to show you is the fence. So my entire property is fenced, and like I showed you a little bit earlier, this whole property is fenced. So all of the value of this fencing is going to be accelerated for me. Even though I bought it used, and even though it may last for 30 more years, I'm gonna put it in the 15-year asset class as an acceleratable item. So just for clarity, you cannot depreciate land, right? The dirt that is 2 feet underneath where I'm standing right now, the intrinsic value of this space on planet Earth is not a depreciable asset. You cannot depreciate that over anything. It is in an asset class of its own, and the asset class is called no depreciation. But everything above it, right? I mean, we would look at this and we would think, oh, this gravel is part of the land. Or you would look at this lot and you would think to myself, besides those metal structures up there, you would think all he bought was land, right? But in reality, I bought a lot of improved land, and we want to separate those land improvements from the land itself and depreciate all those. So I hope you guys learned something. If you're sitting here thinking, man, I bought a property and it had a lot of landscaping, or I bought a property and it had a pool. Pools are depreciable assets, okay? If you are thinking to yourself, well, I don't know about the tax benefits I could get, I want to invite you guys to schedule a consultation with my team at Remote Cost Seg. We'll talk to you absolutely free about what kind of money you could save from doing a cost segregation study on your property. Be great, and we look forward to talking with you soon. Woo!